Terrible.
Give me 1 second. Okay. Yeah, let's get started, guys. So, welcome everybody to our weekly economic chat, where there's really no specific topics. I usually like to go through a couple of items that's happened in the past week, and it's always a good time to just chime in with everybody from the news that you guys are seeing from your end, what's happening in the economy, and also discuss some macro, some news, and also I'll be finishing up with some technical analysis, mainly on gold, silver, and the S&P. Like to shelve that for till last, but let's get going. So this week, and then since like the last week, more news, right? More bad news coming on. Starting with retail sales, far worse than the 12.3 as expected. And you're gonna see more damage, especially in the clothing sector. So you guys already heard of JCPenney, Lehman Marcus, J. Crew. I think more to come. I think that's expected, anyways, right? I mean, from you guys seeing that last couple of years, the retail sector has been taking a hit, but more so now than ever. So that's that. On the factory production, on the U.S. manufacturing side, slumped obviously in the last couple of months, and obviously moving into the quarters now, as exposed to after a rise of 5.5, it went down to 13.7. So you see that output includes at mines, right? Remember the ones that you guys were talking about, the gold mines and silver mines, as of last week. Last couple of months they've been affected, but overall it doesn't matter which sector. It's gonna go on. So that's really the manufacturing side of things, and the U.S. side. What else has been happening? Yeah, this is also another big deal, and when people say V-shaped recovery, I don't believe it. It's full of crap, right? I mean, first of all, you have 1/4 of American restaurants that just won't reopen due to they just ran out of cash, or there's just nobody coming in. And even if you have the 3/4 left in the restaurant business, they have to do social distancing. So you're going to reduce capacity by 50% in terms of like sitting area, right? So I don't follow how these restaurants can continue to make money, because even just like 5% or 10% of their normal capacity, they'll go out of business already. So I have no idea, right? We'll see how that's going to play out, but definitely not anything surprising. But you kind of see some of the stats from Open Table and stuff like that, sit down diners, on some of these articles. Another output indicator is the transportation. So obviously freight index and stuff like that. If you can't get your trains, if you can't get your trucks, if nothing gets delivered, then your economy is at a halt, right? So obviously some of these indexes are as expected, overall, year over year. In April, you see these continue to go down. I don't think that's any surprise neither. But I usually like to watch these stats, and especially freight and shipping, because these are usually your domestic and your international imports from China and whatnot. So these would kind of be your leading indicators too. When this picks up, you should see manufacturing also pick up. But right now, I just don't see that happening, given that we're still in the economy of being locked down and nobody's going back to work. But I'll let you take a look at these ones. And GDP as a whole, obviously, no good, right? Let me see, Daryl's coming in. So, they were saying how for those that have been reading those Q1 stats for 2020, Q1 for is -5, and they were predicting maybe -10 or -15 for Q2, which we're in the quarter now, but that's definitely not the case. The latest estimate is you're almost near -41, which is unprecedented in our current last like 10, 15, 20 years. Even the World War II, I don't think it was that bad, but these are just from the Atlanta Fed. Just saying that it's going to be as bad as it's going to get. And some of the more optimistic tones from the U.S. government is definitely a lot higher than this, which I don't really believe. Also on the printing side, we were talking about last week where as soon as they already passed, President Trump has signed already a $2 trillion bill as of like a couple of weeks ago, and literally the ink hasn't even dried yet, and they're already talking about another $3 trillion. They're being drafted right now, additional funds. So it's not enough cash. They're going to continue to inject more into the market and print up additional or assets or to create more debt to buy from the government, buy back to print out all this crazy money. But it's looking like more than $10 trillion. And more people coming. All right. That's $10 trillion as an estimate as of right now, but obviously it's going to get worse and worse depending on how long we lock down. And by the way, I mean, we can only look at this, or should I say it stops peaking when we can get back to work. But obviously that is not the case, and they'll continue to put more. And it's not just the US. Germany, France, all the same thing. Japan, all the G7, G20, countries, they're announcing their own stock buyback, asset purchases and quantitative easing on their side. They're looking at the 500 billion euro on that side hit by the pandemic. They're going to announce their own between the Eurozone to stabilize their own currency and stabilize their own economy. Okay. And so this is also another thing you guys want to keep in track or take a look at in terms of the bonds. So the bonds are just your government treasuries, your government backed liabilities, right? So that's directly tied in with quantitative easing. So when they print more money, they're also buying back their own bonds, right? So that they can invest or pump into the economy to either spend it on government infrastructure projects or just pump directly the money into the economy directly to support the businesses and whatnot. And you can see here, BOJ, Bank of Japan, Bank of England, Bank of China, ECB, they're going to continue to do this. Who knows how long it's going to be, but right now nobody's caring about the inflation. They're just gonna. It's right now everybody's worried about the inflation, which it doesn't really make sense that they continue to say that bring inflation up to 2%. Inflation is never a good thing. I don't understand why they keep saying that, right? But you can see that the bonds for every single country or government issued debt continues to expand everywhere you go. Canada, Australia, ECB, BOJ. So watch out for that. But when the day will come, the judgment day, when in this Bloomberg article here, is when bonds start to default, aka nobody has any confidence in the government's ability to pay back their own debt. So which are the bonds, right? So when that crashes, you're talking about pensions, you're talking about treasuries, notes, devaluation of the dollar, of whatever currency. That will be pretty much judgment day, and that's the biggest thing that you want to take a look at, because bonds is basically the confidence in the government, and another way to take a look at it. And lastly, two more things here. Americans, and I think this applies to Canadians as well. Even though that I don't think right now we can touch our RSPs without incurring a penalty, but they're having trouble paying for their own problems, right? So a lot of them are tapping into the RRSPs, which is never a good thing, but it tells me that they're getting more and more desperate. So it's pretty easy to say that the money that's been issued to these Americans, which is what, like $1,200, it's not enough for 12 weeks. I don't think that you can do that. Like, I mean, just for mortgage, it's already gone, right? And then you have other debt, you have credit card debt, you still have to pay for food, and you still have to pay for normal expenditures, right? So I don't think that's enough, and that's why the market's already priced in that there's going to be another stimulus coming. and things like that. So, and lastly, I read an interesting article the other day about so this is something that he's I'm not gonna call him a doomsday tinfoil hat guy, but he's always been in gold game. Ivan von Gurs, he's a very, very renowned gold expert here, but he's calling out for the total reset of the monetary system at its worst, and this may take a couple of years, but what that really means is when you see the currency collapse of every single currency in the world, that they continue to print and they can't service it at all. And I mean, for those of you guys that this is also one of my favorite websites called the Debt Clock. I think I've shown it many times to my friends, but it's pretty interesting because you can actually see in real time how much debt is occurring and how much debt revenue. You see this like decreasing, right? It's never going to be able, and this is under 0% interest rate. So in order to service the national debt in terms of its revenue, and remember, like the governments don't make any money. They only get money from you, which is the taxpayers, right? So in order to service that at any level, they either have to jack up prices or increase interest rates. Tax rate, increase taxes or increase interest rates, which will inadvertently do a couple of major damages. So if you increase interest rates, they themselves can't even pay. The government, the municipal, the regular Joes and the corporations that we kept talking about, they have a problem with servicing their own debt. And if you jack tax revenue up, I don't think anybody can pay more than what they're paying right now. So this is pretty scary. So when this guy is talking about the total, here's a couple of points here. When you have a multilateral, multi-global, all the countries can't do it at the same time, they have to reset debt. Now, nobody knows what that's going to look like, but what they're going to do is basically, and we've had this before, they call it debt jubilee, where they just, for example, Zimbabwe, remember when they were printing out the $10 trillion bills and whatnot? They needed a bailout, IMF or whatever, to just say that, okay, if you guys were default, you guys have to reset to another currency or another whatever, and you guys have to face austerity measures. It's no different than Greece when they defaulted. But when the whole world defaults, nobody, because it's unprecedented, nobody knows what's exactly going to happen. But one theory that's moving around is the only way to combat that is to reset the entire debt currency around the world and go back to something that's finite. So when people are talking about gold, people talk about Bitcoin, although I don't think Bitcoin will be the end state. And the reason why I think that's the case is that there is a reason why for the last 10 years, central banks around the world have been buying gold into the tonnage, right? If you guys look at Russia, China, US, well, I don't think US is, but Turkey, those other countries, when they default, the only thing that's an asset to these countries is gold. That's globally recognized. So I think at some point when we do have that, or if we have that, it's going to be somewhere where it's backed by a finite value, aka gold. So, he's been making some predictions about gold, making the 20,000, silver at 1666 or whatnot. But these are just some popular theories floating out there. But do some research. But if you type in just global monetary reset, you're gonna get a lot of different opinions and stuff like that. So that's it for the news part. Any interesting news bits that anybody's been reading or found surprising, or read today's Jerome Powell's testimony about Congress? Any interesting stuff?
What are your thoughts on the testimony?
He's really the same thing. He's really the same thing. Like some of the comments that he made to me was he has no issues alongside with fiscal stimulus policy, which is like the government side, to continue to prop this market up for as long as it's needed, and using all tools available made to both on the fiscal side, the government, and the monetary side, which is the Fed side. So They're gonna, to me, it's just steady as she goes. They're gonna continue to print more debt, continue to print more money, continue to issue more debt, continue to bail people out, and they're going. And the tragedy is, the U.S. dollar. At the end of the day, they can continue to do that in infinitum until until they can't do it anymore. And when they say they can't, I say they can't do it anymore. It's really the U.S. dollar that's going to suffer. But given that it's the global reserve currency and every single other country is using it, it makes it harder for it to tank, right? But eventually, when you print enough of it, all the other countries will look at the U.S. dollar and say that, well, if why would I carry this country's currency when they can't even print off, they pay off their own debt? And the end state is when they dump all their U.S. dollars and U.S. denominated debt, and that money comes back into the U.S. domestically. That's when you have hyperinflation. It's not just the domestic market you have to take a look at. You have to take a look at the international markets as well as to who holds more of the U.S. Dollars and treasuries. Any other interesting things or interesting topics?
Do you think there's any merits to this rumor of, the Fed's doing negative interest rates?
That's a great topic. Yeah. So, for those that haven't been following the markets, there has been this week. It was only, I think, last week or this week that the traders themselves are pricing in, or should I say pricing in, or the betting books or the bookies, right? They're pricing in that near the tail end of this year, there's a big possibility, or there's a small possibility for now, but as it goes along, it's going to increase. There is a probability that negative interest rates will start to exist, which will totally screw up the entire system. Because and for those that don't know what that means, there's a lot of videos out there. I'll send you guys a couple of ones that were done really great by George Gammon as of yesterday. But it basically means that on a super high level, you're paying the bank to hold your money. If you have cash with those guys, with the banks, you're paying the banks to hold your cash, and from the other side of it, if you want to take out more debt, that bank will pay you, which is good, I guess, if you want to take out more debt. But the tragedy is that for the people that save money, aka your dad, my dad, whoever has actually been saving their pensions and stuff like that, their purchasing power gets deteriorated because there's so much money that's flooded in right now. But for the same finite supply, you're gonna see houses or whatever that people find dear, or even food, right? Let's just find food, right? You're gonna see it continue to go up because everybody is flooded with money. But the people that saved will come to terms that their $1 million means nothing now, because you and I can borrow $2 million at a time, which basically just wipes out the purchasing power and everybody else's. It's not good, and ultimately the banks suffer for this, and they can't do business with negative interest rates because that's never been their business model. But there's a lot of effects into that, but it's not a good thing. But I'd rather there's a lot of videos to explain that in much more detail what that means.
My question was more around, do you see any merits to that rumor? Like, why would the Feds have any incentives to actually go with negative interest rates? What would they try to achieve?
So the Feds really have just two tools. There's only two levers that they can pull. One is interest rates, and two is quantitative easing. That's the only two things they can ever do in existence in their whole purpose in life. The other side is fiscal, like government projects and stuff like that, government spending, making big projects. But the reason why they were talking about that is because they don't have any tools left, right? When you have this market continue to tank, and you have people can't going back to work, and you have companies defaulting, and instead of making them bankrupt, they continue to flood them with cash. I mean, where the cash coming from, right? You have to print them. That's the first part. And the second part is you have to tax the people in the future, but you also have to issue more debt to accounts assets and liabilities, right, on the other side of the balance sheet. So yeah, that's it. That's really it. I mean, like I said, rates and quantitative easing. That's it. That's all they got.
I think some European countries are already slightly below zero, right?
Yeah, I think somebody mentioned that on the chat earlier, but I think it was well, Japan is running negative, and the Eurozone has, I believe, Switzerland. They're running negative already, right? So let me just take a look at it here. I'll quickly check that. But yeah, there, that's a great point that you brought up in terms of the. I'll show you the negative right here. You see this? This is Switzerland, right? Anyway, but yeah, Japan has already been running it. And remember, guys, even though it's zero or even positive, when you factor in nominal inflation, right? Nominal inflation is like 2%, right? Everybody's saying 2%. Why do you get a pay raise of 2% a year? It's not a pay raise. It's just to bring it to the standard average everyday Canadian, right? Because everybody's getting screwed by 2% every year. So that's why you get 2%. So what I'm trying to say is we're already running negative interest rates, right? 0.25 minus 2. Yeah, we're already, your cash is bleeding in your checkings account every day, right? 1% a year, right? Or 1 point whatever, right? But yeah, there are some countries bringing into that. But just remember, there's a big difference between Japan, countries like Japan and the U.S., right? So Japan is a net saver country. They have a lot of people that actually save money instead of spending, versus U.S. is a consumer driven. They don't make anything, and that's also a big difference too. Which is Japan, they can hold their stuff, like they produce stuff and they consume it. But what is U.S. gonna do? They can't make their refrigerators. They can't make their cars. They can't make laptops. They can't make desks. All right. So that's kind of the reason why you've been able to see that even though Japan has been on negative for a really long time, they've been able to relatively keep inflation at bay because of some of those factors. Yeah. Any other interesting stuff before we switch over to? We can do Q&A now and then go into the technical analysis now. I'm okay with that, or whatever you guys like. Just open it to the floor.
Yeah, I mean, technical analysis sounds good.
Yeah.
I actually had a quick question. I just couldn't
Yeah.
unmute my mic in time. In terms of physical metals, when you're purchasing, obviously you're trying to pay as little over spot as possible, and the more you buy, the less you pay over spot. How do you balance that with the usefulness of it, in the sense of, are you ever concerned that you're going to have to then spend this physical gold for goods and services in the future in case of a collapse? Or is it more of just, I'm not actually thinking I'm going to have to go out and buy a loaf of bread with gold?
So let me ask you a question. When you go travel to another country, what do you do? Let's just say you go to US, right? You exchange it for US dollars, right? Let's just pretend you don't go to US dollars. You don't go to US. What do you do with that cash? It's all US. What do you do with it?
The cash that you exchange for the vacation?
Yeah.
After the vacation,
or whatever you have left, right? Let's just say you got a lot of it and then you spend maybe 10%, you have 90% left. You're back home in Canada and you have a crap ton of US dollars. What do you do with it? You can either, exchange it back. That's your answer. Think of it as currency. Think of it as money, right? In the apocalyptic world, sorry, let me tell you, it's not an apocalyptic world. Let's go back to like 10,000 years ago when it was back in the Roman times, the Greeks and the Egyptians, right? They exchanged in gold and silver. It's just denominated by weight, right? Mm-hmm. If we ever go back to that era where it's going to be denominated by, like, aka, if we were to have a global reset and everything will have to be by gold by the central banks around the world, and they agree that, you know what, there's going to be a new currency called the ABCD. An ABCD of $1 of ABCD is equal to 0.001 gram of gold or something like that. Then that's when you sell it and you get back that new currency. Or we might be able to just continue to roll on. I don't know how much gold is going to be in the future, but you can go back to your precious metals dealer or your banks and just sell your gold and ask them to give you fiat money. That could be US, Canadian, Japanese, Euro, doesn't matter.
Okay, so it's almost sounds a little gimmicky when you look at these sets of coins that can be broken into 4, or like 100-gram piece that can be broken up into 100 grams. It's kind of not a gimmick, but just not necessarily useful.
It's more about divisibility, right? Because if you're looking for ways to, let's just say we actually go back to those days where you have to actually trade silver or gold into, I don't know, a loaf of bread, then instead of doing gold, just buy silver. It's much easier because it's a lot cheaper, right? I would rather you go and buy like 1 gram or 1 ounce of silver. 1 ounce of silver is like $20 Canadian, right? And if you hold a bunch of that, then in the future, if let's just say we go back to that standard and the Canadian dollar is complete waste, and your mechanic only accepts gold and silver, then it's very easy to just give him 1 ounce of silver, because that doesn't deteriorate, right? Rather than the Canadian dollar, which could deteriorate every single day due to inflation.
Mm-hmm.
Yeah.
Okay. Thanks, Victor.
Yeah. Any other questions before we get back to? Oh, I think Eris, you had a question about phy.to, right?
Yep, sure did. Just wondering if you could run by it. I was thinking of entering that market today. I got caught up at work, and by the time I got home, it was all closed. So if you could just kind of walk me through maybe some of the basics there, your thoughts.
Yeah.
Good time to enter, maybe not.
Yeah. So let's talk about what phy.to is, right? phy.to is kind of like GLD for you guys that are already on it. It's the difference between this one versus GLD is phy.to, Sprott, which is actually really a reputable company, is actually allocated by name. So AKA right now, in GLD, they can actually, so let's just say they have like 100,000 tons, right? But remember that conversation a couple of weeks ago where I can say, people can overbook or people over allocate like 5 different names onto one single gram. They're just playing that game, right? So for those of you guys that weren't there the other day, I was just giving the analogy of it's like airlines, right? When you go to airlines, there's a chance that get you overbooked. Why do they do that? Is because they know that for every single flight that's been flying, about 15% people don't show up. So what they do is they over allocate about 110%, and they play this game because 110%, I can still sell the tickets at retail price, but whoever doesn't show up, great. They just lost their money, but then I already sold another 15 seats, and then I book in full. Their goal is always 100 occupancy, right? Then the question is, what happens when there's people over allocation, people like lining up, and then they play that game? Oh, we got $100 off credit. Oh, we got a free hotel stay, right? And they play that game because they know that they can save more money by giving you like a free hotel stay versus the amount of penalty that they have to, or sorry, the missing revenue by not generating the same 15 seats. So same thing. They can continue to play this game as long as not everybody allocates the same seat. So gold is exactly the same thing. GLD is, let's just say, if the 100 tons of it, and you have 1 million people claiming it, as long as not everybody takes it all out or allocates it at the same time, you can continue to play this musical chair. But phy.to does not do that, because when you make a claim on it and you buy a share of it, they actually insure, and also it's insured. So that's very different. It adds an extra layer of confidence as a consumer. They insure it against theft, fire, whatever, destruction, and also has your name on it. So when it's allocated, let's just say you buy like 10 shares. It means that you have 10 shares of whatever gold is in their vault, and Eris owns that. And then Junha can't get to it. He can only buy like whatever's next to you or whatever. So it's great on that sense. In terms of what time do I buy it, it's no different than how I tell every one of my friends, all right, just buy gold. Like today's great day, tomorrow's a great day. Like if you're watching it on a day-to-day hourly basis, then obviously you're gonna care about is it a good time to buy today versus tomorrow? But if you don't care about it and you're looking at multiple years, then it doesn't matter. Just buy it because you're buying insurance. It's no different than asking yourself, when is the best time to buy insurance? It's today. It's now. If it's not today, it's tomorrow. It's the day after, right? So I hope that answers your question.
Yeah, man. So you're dead set. I mean, it looked like for that particular stock that it started to kind of find some sort of resistance, but you're saying that there's no way it's still going to continue to rise. Because of all the money printing and the inflation and whatnot.
Yeah, you have to remember the fundamental case against why gold is rising. It's not about COVID, right? Like gold is rising because of the insolvency of the governments, the massive amounts of printing, and the destruction of wealth by money printing. And it's unsolvable. Like if you take a look at debt and stuff like that, again, like what happens when you don't pay your debt. Well, what happens if the government doesn't pay? Have you ever asked that question? They don't have to, right? They can continue to print until they can't, right? And the only time that they can't is if they ruin their dollar. So gold is just a hedge against that.
Okay.
But the fundamentals, that's the reason why gold is so strong. If you were to take a look at the Mike Maloney series, again, go through it. It'll answer all your questions on why gold, and it does a really wicked job than me talking about it.
All right, man. Thank you.
Any other questions about, I don't know, technical analysis, stocks, or whatever?
What's your thoughts on Bitcoin as opposed to gold as a hedge against future?
That's a really good question. It's an age-old debate.
I was wondering that too, actually.
Yeah, so there's a lot of people out there comparing Bitcoin and versus gold, and to me, I think they can both exist, right? So the major difference between Bitcoin versus, okay, so let's talk about they're similar, right? So they're finite. You can't print more. They're they're immune against government intervention. You can buy and sell it relatively easily. You can take it with you, go anywhere in the world with it, right? So those are the main core similarities. The difference between where I find them to be different okay. The biggest difference between Bitcoin and gold is I find that Bitcoin is more towards it's like the greater fool theory, right? So when I say that, what do I mean by that? Bitcoin by itself, you can't do much with it, right? So let me talk about gold, what you can do with it. Gold by itself, you can medical devices, semiconductors, your cell phone, jewelry. Jewelry is like a $10 trillion market, like just by itself and not buying and selling. There's intrinsic value into it. Bitcoin, the only way that you make money is selling it to another person. As a speculator, the only purpose of you buying Bitcoin is to hope that somebody buys it off you at a higher price. You can say that with gold, but except gold by itself, if it doesn't even transact, if you don't trade it, if you don't sell it to anybody, it has all those uses already by itself without being traded, like jewelry, medical devices, whatnot. And also the biggest difference between two is history, right? Gold has 4,000 or 5,000 years of history, and Bitcoin has about 10. And do I believe in Bitcoin? I believe in cryptocurrency. I just don't believe in Bitcoin because nothing in history has ever told me that the first version of it that comes out is the best. I just don't believe that because it'll always have derivatives, Ethereum, like I don't know. There's thousands of cryptocurrencies out there. I can't follow all of them, but eventually one will be victorious, right? So the way that I take a look at the Bitcoin industry is kind of like when Aurora Cannabis and Canopy Growth came out. There was thousands of these other small guys competing for dominance, and at the end of the day, they buy each other out. They go through a consolidation phase, and then one or two will become victors, right? And then I just have to see what happens in that space to get into it. But I'd rather do gold than that of Bitcoin because of some of these things I just talked about. But they're good. I think they both have their own right. They can both exist. I just like gold better. And also, very importantly, if you got to make sure you have an internet connection, obviously, and your wallet doesn't get stolen. And also I think the biggest thing for me as to why I'm not against why I'm not into Bitcoin yet is tell me a place where it accepts Bitcoin, right? For example, gold. I can go into precious metals dealers to trade it right away, or I can go to banks, right? Even banks
Trade it
accept
for
it.
cashing, like fiat?
Yeah, cash. Yeah, fiat. Yeah. But where do I do that for Bitcoin?
You just withdraw it into PayPal, I think.
Correct. So you have to withdraw on PayPal, and then PayPal has to draw into your deposit. Like there's at least a couple of middlemen in the middle, right?
Yeah.
No, there's exchanges that allow you to convert to fiat easily.
Yeah. So maybe it's getting better than
It's
before.
easier now.
It's easier. Yeah, that's right.
It's just an e-transfer now. It's not hard.
Yeah. But like it's easy for me to go into the bank right now and just exchange it, like without any sort of, Anyway, that's for another day. I think I talked about the Bitcoin versus gold as a high level.
Yep.
Any other questions?
Brian has a question for you in a Messenger's chat.
There's a chat.
Our investors chat. I'll just read it out loud. It says, "What's your option strategy for gold? Do you do straight calls or straddle spreads? Same strike price, different expiry?"
Oh yeah, no, I mean I don't get sophisticated with options and stuff like that. I usually just I buy I for example, I have like these two vehicles, right? So I do short-term options and I have long-term options, right? My short-term is usually like 5 months, and I have a really long one, which is like 1 year, which is not really that long at all. But what I do to kind of hedge against that is through a combination of just stop losses, or that of I buy the other side as a call, and then I underweight that, or buy really out of options, really out of money options on the other side, and then that's how I hedge. That's really it. There are many different strategies for this stuff, but those are the two of the common ones that I use. Okay, any other questions before we get into charts?
Yep, I have one.
Okay.
Can you talk a little bit about how SPX works? I think I'm getting the symbol right, or SPSX, I believe.
Yeah, so there's a couple of things, right? There's the SPX, which is the index. There's SPY, which is the ETF that's based or tracking the index. And then there's this one, SPX 500 USD, which I like. It's the same thing. It's almost the same thing, guys. But basically, it's this S&P 500, or the index that tracks, like I believe, like 500 companies. And when they go up, it's like a mutual fund, right? So imagine like one mutual fund that has shares in 500 different companies. So I use that as a barometer. So if everything looks good, or like aka the general market looks good, then everything goes up. And if the vice versa, then everything goes down. However, it's totally different now because of the FANG stocks. They now dominate or have such a heavy, like Amazon's 25%, Microsoft, Apple, and all that. They're almost like, they basically are the dominators of the market. So if they go up like 1%, then everything falls beneath them, right? But essentially, that's what the SPX is. It's just a index of the market, of market health.
Okay.
Okay.
Thank you.
Okay. Should I go into charting now?
I'm just wondering if it's worth mentioning the SPXS, which is the converse to that.
Yes. So for more of you guys that are more sophisticated traders, I don't know if sophisticated is the right word. There's many different ways that you can play, right? So if you want to just trade the SPX or the the index itself, just use SPY, right? You can buy SPY, or buy call options, put options in SPY, which is the, like I was talking before, just the ETF for it, right? It looks exactly the same. That's why I'm saying it's all the same thing. except they have different numbers, but they're all the chart is exactly the same. Now there is SPY, which is the index. Sorry, the ETF that tracks index, because you can't trade indexes. There's also SPXS, which is the 3 times leverage version of the inverse. So, which basically you make money when SPY or SPX goes down. This is the bear or the short version of it, 300%, which is the super leverage one. And then the brother of that is the SPXL, which is the inverse of that other one. So one is long, one is short. So you don't have to do options. You don't have to do margin. You don't have to do short selling. You can actually buy these ETFs, which does the shorting and stuff for you. So the ticker is SPXS for the bears, or it goes down, you make money, or L, which is you make money when it goes up. Okay. So I think some of you guys were playing that as well as I am. Okay. Any other questions? Okay, moving along here. So let's go into some of the charting and some of my observations and stuff like that. And feel free to chime. And I mean, you know, charting is really an art and a science at the same time, right? So starting off with the weekly, you know that it's surprisingly, it looks like it's on a weekly side. One can say that yeah, it's entered a bear market because it punched through like all these 1, 2, 3, 4, 5 lows. But now it's going back up. So if to be on a weekly, you know, a strong chart, it has to go back to establish a low first, and the low has to be above this one, and they'll continue to go up if that's the case, right? But let's go into the daily one. It's more shorter term, and it's much easier to see on a shorter term that it has been on a daily bull market for some time now, since March, right? So lower lows, higher highs, higher lows, higher highs, higher lows, higher lows, and it's now trapped in this little equilibrium here between these two guidelines. So it depends on how you want to play it, right? I like I fundamentally, I think I would short it, but I've been burned a lot in the last couple of weeks in regards to shorting S&P. But if you want to, for example, go long on it, I would buy your stop. I would buy your entries like right here, right at like 27.80, and then put your stop losses right after that. Or if that breaks through, then the next one is this one, which is 27.34, and the next one would be here. But if you're on the other side of the coin, you know, in terms of you want to short it, you want to make an entry here after yesterday, right? Or is it today? No, actually, it was today. After failing to meet, you know, let's just zoom in a little bit further in the 4-hour one, right? So the kind of the signal that when it told me that, I might be wrong tomorrow, who knows, right? But I look at on the 4-hour charts, I look at these two bandwidths, right? That's equilibrium. I take a look at the top line, and I saw that in the 4-hour chart, the last couple of days, it was unable to break through the March, April highs. And when you see that, and when you see some of the shorter candles, and you know, it just means that it's having problems making a decision, and usually means that it's on the flip side as well. You can tell that on the RSI, it's more on the overbought side. And also the MACD will also tell you the same thing. So that would signal that, you know, a short might be in order. So that's why I put in an entry, and it was signified that today it did go down, but who knows, right? We're still doing with this massive sell-off too, which is great, at 3 o'clock. But we have to see, because this looks like it's going to come back up. We're going to see what happens tomorrow at the open, but ideally, what I want to see is that it's either going to go here, right, because of this this other line that I'm seeing, or it could go here, or it could go here. Who knows, right? Or it could just continue to go up. Who knows, right? It just depends on you know, the market. But I would say 60% confidence it'll continue to go down tomorrow. But who knows, right? That's the market for you. Yeah, that's really it for S&P. I have a lot of trouble figuring out. It doesn't make sense in my head. Like the fundamental reasons and the technical reasons they're two different things. Technicals are telling me it's still a great opportunity like to buy, but my fundamentals will tell me that it doesn't make sense. So that's why I'm resisting buying longs, but I will play shorts every now and then. But you know, it's very dangerous to. But on the other hand, if you can make it like this one, this would have been a spectacular. Oops, sorry, this would have been a spectacular play for you, right? I mean, it dropped like this would have been really good. But who knows? That's S&P. Okay, on the dollar. I like to chart this as well because U.S. dollar is obviously inversely proportional to gold and silver. It gives fuel to gold and silver. So ideally, you want to see it. So typically, when dollar goes up, gold and silver goes down. But sometimes you can see that both dollar and gold and silver both can go up. But most likely, U.S. dollar will go down, and then gold and silver goes up. So let's talk about. Let's zoom out first. On a 4-hour range, you can see it's pretty predictable, which I kind of like to see. It's kind of stranded between these two equilibriums, and then it got tighter between this, and then it got even tighter between this and this. I like seeing that because you know, like I was talking about before, when it coils up into a little bit of a denser trading range, it usually shoots up violently or shoots down violently. It just depends on the direction. If I were to take a look at the, so if I were to trade this, it's actually very easy to swing, right? So you would sell short here, you would buy long here, you would sell short here, you would buy long here, because it's actually pretty predictable, which is pretty nice for this one. You can see that on the maybe let's go down on the 1-hour range here. It's having trouble breaking through this one, which that's why you can see that the last couple of days have been spectacular for gold and silvers because the U.S. dollar has just puked all over the place and it's just gave up, right? So it just refuses to go up. So you can tell that on the hourly here, massive dump, and it's already wiped out its highs. So it's lower highs, lower lows, trying to get back up here. But we'll see if this. Let's take a look at here. Now there's a low here, there's a low here, right? So if this goes below, then it'll just be a continuation of the hourly bearish signal. But if it starts to go up, and this one would be higher than this one, then it will just be a higher high, higher low. That means that on the hourly chart, it's bullish, but then you have to zoom out to like the 4-hour to see if it's still bullish, right? So right now, on that, it hasn't given us a signal yet. What it has to do is on the 4. If you were to take a look at 4-hour, you would have to break this high, and then it will have to come back down to break higher than this low. To give you the 4-hour and then daily, etc. Right? So you have to take a look at multiple time frames. But in essence, U.S. dollar is still having trouble climbing up, which is good. But I'm also seeing that there's a higher. You have to. Let's take a look at the dailies as well. There's not much decision on the U.S. dollar that I see right now because it's still stuck on these two. Like for example, if it's here, then yeah, it's obvious, right? It's like a higher high, it's moving, it's trending, it's moving, it's trending, but it's still stuck between here and here, which makes it indecisive. But for the short term, aka like 1 or 2 days, most likely it's going to draw down and it's going to stay within this trading range until something happens. But you will see that definitely when you see gold. Okay, great. Hey, look at this. Gold is continuing to climb up. Crazy, right? Unbelievable. You guys have made some good money the last couple of weeks. Let's take a look at gold first. Again, zooming out. Very easy to tell. Higher highs on the weekly. Weekly is like the strongest for me, right? If I see weekly higher, month is even strongest, right? Think of strongest, stronger, blah, blah, blah. Weekly just tells me, am I on the right track? So I want to see higher highs. I want to see lower lows. I don't want to see equilibriums for too long. Because it just means that like equilibrium would be like, for example, here to here, here to here. This range, like for 3 months, it was an equilibrium. I don't want to see that. I want to see it trending, and it's been a good trend. It just tells me that I'm on a good path. Okay, I should be bullish on gold. Zoom in. Let's go to the 4-hour, right? It's been, you know, kind of an equilibrium for the last like couple of days, but then it continued to shoots up, right? So, but no, it actually has been rising up. But sorry, I'm on the 4-hour basis now. You can tell that last couple of days has been good by, again, followed by higher highs, higher lows, higher highs, higher lows as compared to this. So there's a lot of room, right? So there's a lot of room for the 4-hour or the hourly to continue to show strength. The resistance, I want to take a look at this one, obviously at 1795. But the beauty about it is if that breaks, guys, oh my God, you should see the next resistance. It's like, I have to zoom out because it's that long. It's this far. It's like back in 2012, and then the highest of all highs is back in 2011. The high for 2012 is like 1795, which is about $40 away. And then the next one's like 19, which is like $200 away. Once you break that, it's like blue sky. It will just continue to keep going. And that's when I say, you know, this is right now just a pre-drinking party before you get to the party. Right now, things are not too many people know about this yet, right? It's not mainstream media. When you hear your friends and family and your neighbors tell you about gold, that's when you get out, right? Same thing with marijuana back in 2014 for me. Same with everything that nobody talks about. It's the undervalued stuff that you want to talk about. The party starts when it breaks about this. Why? Because that's when it'll get the news media coverage. It'll be like, you know, gold is at its all-time high, which is, you know, unbeknownst to a lot of people. So that's why you want to get into the party ones early. But I see good continued strength in gold. Nothing to change here. What's most likely going to happen is that it's gonna. Where's my pen? Yeah. So when it hits it, it'll most likely go back and have to go and retest, right? Go back to form a lower low and continue to crash it again. It has to crash a couple of times. It usually doesn't go through with that much strength in the first or second try. Usually by third or fourth, right? You can tell by, you know, for example, there was a resistance here, right? 1, 2, 3, and then they crushed it by the third time, but it took a while, right? So that's why I'm saying most likely I would sell, my sell price point there. But even if it doesn't go that high, and it can just go up, your room to go through on the 4-hourly is the next low, right? So most likely your first resistance might be here because of this trend line, but you know, your second one would be here. But the stronger ones would be around like 1682. Like I don't think it'll ever go back down to here, but some of your stronger support lines are down here. But you have multiple support lines defending it. So that's why I see it's going to get tighter and tighter and tighter, and then it's going to either spring up or it's going to breathe a little bit, or it might just get into a range where it's just going to continue to go like this into like this and this. We just have to see it the next couple of days. And that's gold.
Hey, Vic.
Yep.
Brian here. Sorry to interrupt.
Yep.
If you look at that really long-term chart, some people are saying that, you know, gold is forming a cup and handle starting from, you know, way back 2011 till now, and then it's gonna just
2011
sky. Like yeah, like you see the big cup
right here.
Yeah.
What do you mean?
So yeah, see this cup. Some people are saying that
right
we're
here?
just waiting to form the handle.
Oh yeah, you're talking. I see what
Yeah.
you're saying. You're talking about how does it go? It goes like this and then this,
Yeah, it goes
right?
like this and it goes down. Yeah, that's the handle, and then it'll go boom up really, really high.
Explosive, yeah. So
Yeah.
yeah, I mean, it won't surprise me that it needs to take a break, right? When I say take a break,
Yeah.
I don't know how far it will consolidate, but that will be the ultimate like buying the dip opportunity. You have a really strong case. Like, I mean, most of the time, if you're talking about like those kind of indicators like cup and handle,
Yeah.
here would be a good one. Here would be a good one, but you're looking at like back at 1100. I don't even know if people are gonna let it go down to 1100 because a lot of people just buy, right? So
Yeah.
it really depends. It won't be traditional. It may be just maybe
like
you know
a tiny handle.
like a tiny handle,
Yeah.
right? back to maybe 1600 or 1500, and then that's it. It just shoots up, right? So you just have to monitor the momentum for that. So right now on the weekly chart, we're still doing okay. We're not oversold yet. It looks like we're kind of oversold here, but I usually look at RSIs when it hits 80. I'm like, okay, I have to take a look at it. But again, I would look at continued strength, right? So on the 4-hourly, if I see smaller and smaller and smaller candles, and I and I don't see enough volume to prop it up, that's when I'm like, okay, that's it, right? Let me just sell out, or for now, and that kind of thing, right? So that's how it would. Oh, and another thing, great point that you brought up there. Another thing I want to bring to everybody's attention in regards to the S&P is, I want to show. God damn it! Let me just get rid of all these stupid things. Okay, now, very importantly, I'm gonna zoom out. Okay, what I want to show you is, speaking of volume, another analyst that was just talking to me the other day, when it went down, obviously momentum picked up because everybody's buying and selling, trying to get out of the market, et cetera, and then they were planting the next move and stuff like that. Now, one thing to note is that you see a gradual decline in volume, and when that happens, it just tells me that the direction that they're moving in usually means it's fading. Okay, like the typical average for your S&P is like this. It's like this quiet, right? But now it's like, it's now doubled. But back in the day, it was, back 2 months ago, it was like times 12 or something like that. But basically, what I want to say is just watch out for volume. Because when it fades,
it's a weekly meeting.
It usually just goes to the other way. So just keep that in mind. Okay, I think that's about it. I have 1 more minute. I don't want to spend too much of everybody's time. Silver is, for those of you guys that went hard on silver, congratulations. It's been outshining gold the last week, which is great to see. It needs to break this out, right? Because right now silver is almost at its multi month. So March is still at this resistance, and then the next one is the $18, $18.90, whatever. But you can tell that, for example, it's hit it like once, twice already, 3, 4. So I have to watch tomorrow, because if it cannot break above this, I'm gonna sell, right? It just means that it's most likely it's a little bit too much. It needs to consolidate. Where is it going to consolidate to? I like this area because it's congested, and what that means is that there's lots of activities here where most likely it will go here for a while, and then it'll try up again. So silver is looking good. I love that. It's still undervalued in the long term. Short term, I have to watch this line, and that's my line in the sand. If it breaks above, good times ahead. It will continue to keep going. But when it breaks up, it has to break in volume, and it has to close above that line for that day. So I want to see both, and I want to see follow through. Like the hours right after it broke it, I want to see volume keep coming in, and I want to see the candlestick continue to go up. Otherwise, it's just going to be a false breakout, and it'll just go the other way. So we'll have to see. But it looks like silver's trying to break out this resistance line of 1759. Yeah.
What do you think happened the last hour, half hour today with silver? Is it just like following the broader market? I wasn't watching it like the last half hour. I was doing something with my kid, and then on one of my shorter term calls, I friggin' stopped out.
Oh, you mean just went down for a little bit?
Yeah. Well, yeah.
Yeah. So to be honest, I'm looking at this chart around 3, 4 o'clock and that kind of thing. Yeah. You see the volume; it's like dismal. So what that tells me is nothing's happening. I don't think it's driven by a news event. Right? It's not driven by news. It's maybe somebody selling, just profit taking, or maybe they're seeing the same thing as we're talking about, where they're seeing it go up, but they can't break through. They want to take their profits, and they don't want to risk over the overnight, that kind of thing, right? So, right, it could be any one of those reasons, but at the same time, look at after hours, right? Just continue to went up. So, you know, that's
But
what happens.
that was kind of what happened Sunday night too, right? Sunday night, like gold and silver were going nuts, like after hours.
Yep.
Like gold was like 1767, something like that.
Yep.
And then Monday, it dipped a little bit in the open when
But
the
just went
markets
back up.
open.
Yep.
And then I was like, okay, like to get some calls in on the dip, and then like freaking like I think it's that stupid like Moderna the vaccine. They
Mhm.
released like the news about positive news vaccine, and then everyone went into like risk mode, and
Yep.
then the prices kind of tanked.
Yeah, you're talking about right here.
Yeah.
But as you can
So-
see, it's not sustained, right? I mean, like
No.
that's like one of those
I'm
fault.
still
Yeah.
on a paper loss on those calls, especially like with some of the silver calls. Like you were saying, like if it doesn't break through like 1750, you would sell, right? Well, what if I have like some longer term calls like
Yeah, then keep
November,
it. Yeah,
January?
that's what I'm
you
saying.
would,
Like I would just keep it. Don't touch it.
Yeah.
Don't touch it. That's
yeah.
that's the whole point of longer term calls, right? So my
Yeah.
January ones, I'm not touching it. Even if I'm taking a loss, I'm not touching it.
Yeah,
Right?
yeah.
The whole point is don't touch it, right? The just
Mhm.
short term ones, you may, or you might just like if you're already, you know, if you already earning money in your long term calls, I would just sell it and then buy back in on the dip and then extend it to, you know, instead of January, doing March now or whatever. Just
Right.
extend your time frame.
Right.
But as you can see here, you know, it's not sustained. It's just your Moderna news. I think that's true. Partly is true, and also just profit taking. I mean, like gold has been ripped the last like couple of days, right? So when that happens, buying the dip occurs. Buy the dip occurs when people are still fundamentally long or bullish. It's just that there's some news event that crushes, and then but then the sideline long bullish people come in and swoop up at discount prices, and they continue to drive it up. So like I said, congrats to you guys that continue to buy the dips, and then you would have been rewarded by at least a couple %. If you were options, it'll be even more, right? So, all right, guys, it's 10 o'clock. I think that's about it.
Thanks a lot.
Yeah. Do you guys want to continue doing? I'm gonna stop recording. Do you guys want to continue doing weekly, or do you think that's too much? Or just like